All right. It is, what time is it now? 3:05. Okay, we gave people 5 minutes. That is more than enough time. Hope all of you are doing well. Now, let me get my screen ready over here. I was going to make a simple breakdown on gold, but I thought, hey, I promised you guys last time we did one of these that I was going to do another one. So I wanted to do a call with you guys. Of course, I'm going to answer as many questions as possible. Bear with me. Okay, I know there's going to be a lot of questions. There always is, and that's completely fine. However, this is not like a Q&A based call. Maybe we can run something like that in the future. So again, I'll answer as much as possible, but bear with me. The sole purpose of this call is to go through gold price action that we got later in the week, and I'm going to be showing you guys my long position, etc. All right. So any questions right now? Again, please, I can read what you guys are putting in chat, but I'm going to be going through the charts. Maybe at the very end of the call, we'll go through some questions. But again, bear with me for now. We're going to be talking about charts, going through charts, all the good stuff. All right. Cool. So as you guys know, I am back on FX. I didn't switch back over anything. I added it. So as you guys know, the last couple months I've been very active in the futures space. However, the last couple weeks, if you guys are futures traders, you guys are pretty aware that it's been very blah. Okay, assets are at all-time highs. Everything I look at least is at all-time highs, and that's not price action I like to be involved in. Okay, probabilities go down massively. And again, there's a lack of data in front of me, and when there's a lack of data, I have a lack of confidence, and it's just like a chain reaction. So I understand this. So these are conditions I like to be sidelined in. However, as a trader, we have to learn how to adjust to certain market conditions. So that's why I have now gone back to forex and added some forex to the portfolio. So I'm actively looking at the forex market now, and I was taking trades on, what did I take? I took UJ shorts this week, I took gold longs this week, and then a small GJ short to end the week. Okay, but yeah, I mean, there's been opportunity in the forex market, so I thought, hey, why not? I'm gonna dip my toes back in, and we'll see how it goes. I will definitely update you guys on the socials and tell you guys how it's going. So nonetheless, we're gonna talk about gold. Okay, start here on the hourly chart and kind of zoom in on this price action right here. Okay, as you guys can probably tell, like, it's getting very rangy, right? You can see this kind of PA going on. All right, we had FOMC Wednesday. 1 second. Okay, we're good. We had FOMC on Wednesday. That was late New York, as you guys know. Okay, price stabbed all-time highs. My mic isn't down. 1 second. Let me let the chat know, guys. Just so people know. Okay. All-time highs stabbed out on Wednesday. Okay. Listen up from here, please. All-time highs stabbed out on Wednesday, fall on the back of FOMC. Now, this is where a lot of traders screw up. Okay. They don't wait for news to get priced in. It's very important to do so. Why? Because once news is priced in this example here, FOMC priced in Wednesday, now you can typically see cleaner PA going forward. Okay, look at the PA we had before then. Okay, choppy-ish. All right, and then it kind of even went long off this area, which is nothing too clean. But then once FOMC is priced in, I'm more interested to be looking for positions. So if technicals get delivered nicely, now I can start looking for possibly an A+ setup. But any price action that's delivered before FOMC, per my system and my experience, those setups will not be an A+. It's just how it is, okay? Because price action typically before news, all right, so on the left side, is going to be ugly. Once it's priced in, you can start looking for those entries, okay? So that's why I was very, very confident in gold afterwards. After price was delivered, it looked very nice, and that's why I sized in correctly. Okay, so again, FOMC Wednesday, spiking out all-time highs, grabbing any seller liquidity above these highs. Off the back of that, rapid move down, okay? Very rapid. Now, look to the left-hand side. This is where a lot of traders screw up, okay? We can simply mark on here. We've had a BOS to the downside, all that stuff. But what traders forget to do is react to what's going on the left-hand side here. What is this here? This is quite simple. This is a buildup of liquidity. Now, If you want to dissect it, that's fine, and I can do that for you guys. Why is this liquidity? It's quite simple. Actually, very simple. We took out highs, and price made this high, made this low, respected the low, and then we went bullish to the upside. All right, look at this big move we had afterwards. So that now tells me there is liquidity left at this low. You see how simple that is? Now, we don't have to use none of this. I don't even know what all the terminology is nowadays, but that is how easy it is to identify liquidity sometimes. That's it. We have taken out a high, price sold off, respected the low here. Okay, and I'll draw it even like this, a red box, to give you guys a little better indication of what I mean by this. Look at this. That's it. Tapped into this area, went back long, and look what price did after that. High taken. High taken, came down, respected the low, moved away. Came down, respected the low, moved away. Look at that liquidity we left. Okay, how can you argue and tell me that's not liquidity? It's very, very simple. Now you have to use this to your advantage. This is where people screw up. If you identify that this is a liquidity point and you understand that this could be a future target or an area to long off of afterwards, then use that to your advantage, right? So we'll drag it over like this. I set a blue line here at 3633.675. Okay, we're gonna leave that there. Now let's go back over to current price action and analyze what PA is doing here. So let me get rid of this. Now to delete all the noise, price takes out this low. What is the purpose of this? Okay, why did we take out this low? Since we have taken out this low now, the market is telling me that sellers are now induced. Now look up. What do we have here? Very simple, liquidity. All right. From a retail perspective, same thing. Look at this. Lows taken out. Highs respected. We move away. So, liquidity. See that? Very simple. Guys, the webinar is being recorded. Don't worry. Highs respected, moved away. Look at this again. Lows taken out. Highs respected, moved away. So again, people like to draw this on as like a Fibonacci retracement, a trend line, a channel, however you want to draw it. All I understand that this is going to be now a draw on liquidity for the future. Period. Done. So simple. Okay. Just like we did on this side, but now it's on the flip side. So these highs we're going to watch out for. So we mark that on, drag it across. Look what PA does. We respect the lows. And what do I mean by that? Look how that blue line, I identified that's liquidity. 3633.675. We already identified that's a liquidity point. Look what price did. We just went long off it. This is where people get really psyched out and screwed over. And now they're questioning their system and they're questioning all of the moves. Let me get rid of this 1 second. This, when we go long here, this is not a move you want to be involved in. Okay. This is now an engineered liquidity long. And you do not want to be in this long. The only time I'll ever participate in moves like this bullish move here, is if there's some sort of continuation. And there was nothing. There was no type of continuation. So this bullish move, big no-no. Why? We respected liquidity. Now, if you take that whole concept I've been teaching you guys for the last how long now, about low, respecting low, moving away, apply it to over here to the left-hand side. This low has now respected lows to the left-hand side. Okay? And moved away. Important. Very, very important. Moved away. So, price has engineered liquidity down at the lows by inducing buyers. Look what we get now as well. And these are textbook setups. BOS to upside. This is now what retail view as BOS or market structure shift. I don't even know what they do. BOS, whatever. We'll write that. Simple. They're viewing that as a BOS. They are going to be buying these areas. Even down here. Okay, we understand that. Okay, we do not want to be involved in it. Any sort of longs. Now you're going to be buying with retail and you're going to be trading with the trap. No good. So the trade that you do want to be in, watch this. We take out the low. So sellers want to be selling in here. We understand that. Where's their liquidity? Above that high. Big coincidence. We stab out the sellers and we die off to the downside. So number one entry. Put a line on here. Like this. That's entry number one. Where do you target? You have an internal low over here. So we'll put a line here. How do you know the low 3625 is going to be protected if we had BOS there? 3625. 3625 is very, very far. We're not even there yet, bro. I'm talking about the short right now. So short entry, partial point. Simple. Internal liquidity point. Internal low. Partial point there. That's fine. Overall target down at the low. As simple as that. Done. Just like this. So I'll leave it like this. For example, you can take a picture, whatever you want to do. Doesn't matter. This is the first short entry. Gorgeous. You're taking the sell, trapping buyers. Okay? Why is that engineered liquidity? Just explain that. Low, respected low, and went bullish. Okay? No more questions right now, guys. Let me just keep on rolling with this. So we sell off to the downside. Now, why is this important? Why is this big sell-off important? Buyers are now trapped. Why? Because they were induced once this high was taken out. Once we took that high out, buyers wanted to enter positions down here. So we stab them out, we liquidate them, we trap them. Not only do we take this low from the current PA here, look to the left. Low taken out. So anyone buying above, listen, anyone buying above this low here, trapped. I was not confident to take any sort of entries. Let me remove this blue line now since the liquidity is taken. 1 second. I was not confident to take any sort of extreme entries, okay? Because I didn't know if this low could hold or not. So if I'm not sure, guys, if I have a lack of confidence for whatever the reason is, I wait. It's simple. Okay, we're never going to know 100%. That's why we have confluences. That's why we play the probabilities. All right. So I didn't know if this low was going to hold. I let the market confirm that for me. Period. That's it. So I wanted to look for a confirmation. Now, the same thing over and over and over. I'm going to go on the 1 minute and show you guys now. So we have stabbed out this low from the left-hand side. Okay. Now, anybody trying to trade New York here, big mistake. The move was done for the day, and now you're going to be trading some ugly, ugly PA for the rest of the session. What do I see? And again, I hope you guys are starting to notice how simple this can be. All right. We have high taken out, price sold off to the downside, respected the lows, and did what? Went bullish. Wow. And then took out the highs again. Okay. And I'm going to move over. Look at this. You see that? So where have we left liquidity? I'm going to remove all this, clear the chart up right here. That's it. Okay. Now, this was around Asia session. And we're going to play PA out. Okay. I saw this occur. Why is this important again? We've taken out these highs. Buyers induced, right? Same shit over and over and over. Where are they going to want to buy from? In here. In here and here. They want to buy here because that's a pattern. That's a common retail pattern of buying this POI and it going long, okay? And sometimes price will come down here and go long. What does that tell me? We have liquidity left here for the future, period. So that's when patience is very, very important, okay? Understanding the system and trusting the system. This is why you need to know how to identify liquidity. Okay. We're going to draw this on. That's fine. What do we view this as? Same thing. I'm going to mark it on for you. BOS to the upside. Okay. Soon as I saw that happen, all I did was set an alert here. I didn't set a limit. I set an alert. Okay. I don't actually use limits too much. To be honest with you, I rarely use limits. If I do, it's a sell limit because there's no spread on a sell limit. Okay. And then again, this is going for forex. Obviously for futures, there's nothing. But for forex, there's a spread on the buy, but there's no spread on the sell limit. So I set an alert. Once my alert went off at this low, it gave me time to look at the chart, analyze where I wanted to enter, how big my stop loss was going to be, how much I wanted to risk. Okay, so I saw these lows. I wanted to buy below them. Why do I want to buy below them? Hope you guys are starting to realize this. Very simple buildup of liquidity. Okay, and now this is what I view, and everybody likes to overcomplicate this as well. I get a lot of questions about this liquidity block stuff, and you guys are asking me so many questions about it. It's very simple. Price has taken out liquidity to the left. Look at this. Taken out a level of liquidity to the left-hand side, and we moved away aggressively, creating this low. This is what I now call a liquidity block. And that will support my entry. You see how simple this is? I hope that answers a lot of your questions. Okay? Because I get a lot of the same questions all the time. And it's actually very, very simple. Please stop drawing on my chart. Cool. So how am I going to enter this? A lot of people like to wait for, let's see. Let's go in the 1 minute. And we're going to analyze this low down here. So you have basically this whole imbalance. Okay, and we'll draw this on as a blue box. You can wait for the 1 minute to get filled. You can wait for the 1 minute to even get tapped, right? The entry candle here. That's fine. However, I don't care how low I get in. I just want to be in. The most important part is identifying direction. Direction is what pays the profits. Not having the bottom and not having the top. Okay? So, I'm going to remove this. And we can drag this over for the sake of this entry. Now for myself, and this is something I recommend to all of you guys in here, new or advanced, I will always enter as soon as the liquidity is taken. Like this. You see that? I don't need the bottom. Okay, when you guys open up your MT5 or your MT4, whatever thing, does this show you guys a picture of your chart of how pretty it was because you caught the... No, it doesn't. All it does is it shows you a blue number or a red number. We don't give a shit if you get the top or the bottom. I care if you guys are getting the correct direction. Okay, because that means that's how you're going to be making profits. So stop focusing on the exact pin perfect entry. Put a lot of your focus and a lot of your attention on identifying the correct direction. The entries are the easy part. Very easy. Okay, again, how do I enter? Just like this. Off the run of liquidity. Done. Where do I partial? Where do I target? That's the next questions we need to be asking ourselves. Okay, and that's what we're going to talk about right now. So what did we leave after we sold off from the upside here? And I hope you guys are starting to see this. Liquidity. Why is that liquidity? I'll answer this one more time. Look, high, respected high, and we moved away. Okay, leaving liquidity at 3673.20. Okay, it's a possible future target. Okay, now we've already framed out a possible target. Now let's talk about maybe partialing. Okay, and how we can manage the trade, maybe cover our risk or take a small partial. Right away, if the market sells back off and comes to our entry point, and then we get tagged in like this, I'm gonna want to target this high. I'm gonna want to manage above this high. Meaning, once we take out this high, I'll either roll my stop loss, maybe cover some risk, or I'll partial a little bit. One of the two. That's all I'm gonna do. But this high and this high are where my eyes are locked in on. Everything else irrelevant. Understand that this big sell move from high to low, all it did, guys, is induce sellers into the market. That's it. Any sort of reactions we get in these imbalances, any sort of reactions, false, short-lived, and it will be traps for sellers. Okay? Let me clear. Oh, I hate when it does this. 1 second. All right. I'm going to clear some of these markups to clean this chart up. Now let's talk about entry here. So we talked about how we want to enter. Let's see now. What does price do? We've induced higher. So buyers are induced in the market. Don't forget. Look at that. Sold right back to where buyers entered in from the day before and took them out. So in this example, this is perfect for you guys. Yes, the 1 minute was filled, not filled, tapped. So yeah, your 1 minute entry would have worked down here, but I want you guys to avoid this. You're going to lose, not lose, you're going to miss a lot of trades. A lot. You don't need the bottom. You don't need the top. Please just trust me. Okay. We enter like this. Always. How are we going to target, or where are we going to target? We're going to look at these two blue lines. One, 36.51, and the other one, 36.73. Okay? No, I'm not going to analyze BTC. We're going through gold, brother. We get the reaction to the upside. And there it is. So what did I do here? I'm going to explain to you guys. My direction in this specific setup, I was very confident in price to the upside. I put it on my Twitter beforehand, and I said, I want to see gold back to the 36.70s. Okay, so back up to these highs. All right, so once this high was taken, I took a very small partial, and I rolled my stop below the low. That's it. So worst case scenario, Price would come down, take me out at a very small loss here, but my partial covers that. So worst case scenario, I was going to make like $500-600. Worst case. And that's the perspective you guys need to have. Okay. Again, partial, and don't forget target up here. So now I'm going to switch to the 5. Well, let's switch even to the 15-minute, because the move happens later on in New York. Big surprise. Look at this. And we'll cover this quickly. Price takes out these lows, induces sellers. So where are they going to want to enter? At the highs. Price high, respects high, moves away. Liquidity at the highs. And look what happens. Big surprise. Induced sellers, trapped them, ran straight for our target. Just like this. Look at that. It's not a 1 to 16. Let's not BS ourselves. That was just under a 1 to 6. Okay? Gorgeous trade. These trades make your week, could make your month if you trade it properly, if you manage it properly. These are the trades you want to look for. Okay? Again, beautiful opportunity on gold. You had an opportunity on Thursday and an opportunity on Friday's price action. Okay? You caught the whole move. Well done. Well done. It was gorgeous. Okay? These are the trades you guys want to be catching. All right, and I hope you guys learned something here today. Please, everything I said, these are like, this is so much value I'm dumping into you guys right now, especially when I talk about catching lows and catching highs. You don't need to. Sometimes you will. Look, here we did. We got the wick, okay? Is that going to happen all the time? No, it will not. Sometimes you'll be in a trade, it's going to be in drawdown for a couple of minutes, and then maybe it moves in your direction. Just constantly remind yourself you do not want to over-refine and try and catch bottoms and tops. You're gonna accumulate a lot of unnecessary losses. Okay, and it's not necessary long term, not necessary at all. We rarely see you increasing your position side once you took a position. Why? I'm not sure what you mean by that. You don't want to look for your favorite NQ? Listen, Summon Jeet, I'm not trading NQ right now. I told you guys at the beginning of the call, it is currently at all-time highs, and that's not price action I want to be involved in currently. Appreciate you, Marco. No worries, Will. Thanks for the kind words, Will. Appreciate you. Great man, love from Pakistan. Much love back to you, brother. What a crack you are, fella. I'm not sure what you mean by that. Guys, can you please stop drawing on the screen? Or I'll just shut the call down now. Come on. That's not fun for anybody. Are you interested in GBP JPY this week? No, I'm not right now. I'm going to be looking at USD JPY. I posted a chart on my Twitter. So I post a lot on my Twitter. If you guys don't follow me on Twitter, definitely should be doing that. I post a lot of value. I post a lot of charts. A lot of charts that before the moves even occur. So maybe I'm helping you guys with a little bit of direction sometimes. Just sorry, skimming through some questions, guys. And you guys got a lot of ones sometimes. Like I said, I'm not really doing much of a Q&A right now, so I'm going to answer as much as possible. Put your Twitter. 1 second. One sec. Where's the link for this? Oh, here it is. Okay. Here's my Twitter. If you guys want to follow me there. I post a lot of stuff, a lot of charts beforehand as well. Okay, and a lot of value. I'm trying to help you guys as much as possible. I promise. Pairs to watch out for this week. Honestly, I don't have anything really to tell you guys. Indices are cooked. I'd be looking at maybe USD JPY. I'm bullish on USD JPY. For you guys, listen, I'm skimming through some of your questions right now, and I'm not gonna lie. If you watch my YouTube videos slowly, deeply, don't rush them. Okay, you have to understand. I put these together in a specific way. It will answer a lot. It's crazy because it'll answer a lot of these questions in the chat right now. A lot of them. For the people in here that go on these YouTube videos, watch them once, tuck it to the side, and then throw a bunch of questions in the air, you're not doing it properly. Please take your time going through all this content I give you guys. Why is Avid not breaking down the chart with you? I just chose to do the webinar with you guys. There's no reason. Which broker can you recommend? Sasha, I can't really say because it's different for everybody. Like, I only have access to a couple brokers in Canada. How about one-to-one training? Guys, the only really kind of training we offer right now is just our community, our education. Other than that, we have a bunch of free content going out. And then, yeah, we have our blueprint mentorship, but that's closed right now. So there is nothing else currently. What's my win rate? Anywhere in between, Adia, you don't need to continue to spam it. Anywhere in between 35 and like 55%. That's another big mistake in this industry. Everyone likes to focus on win rate. And you're not going to ever find a strategy that provides you an incredible win rate. It's just not possible. So what you need to do is focus on something that's very, very, very important that maybe you're not looking at. Losses need to be smaller than your wins. And that's literally a big period. That's it. That's how easy it can be. Losses smaller than wins. Wins bigger than losses. How many entry models do I have? Well, honestly, like, I guess you can say 2. Sometimes I can take an entry from the left. Sometimes I have to wait for a confirmation. The confirmation is the same every single time. Wins bigger than losses? Always. Always, always, always. I did not like any other entries on this day. No, if that's what you guys are asking. Okay, guys, I'm going to wrap it up here. Again, this is not a Q&A. Maybe we run a Q&A in the future. I did record this call, so look out for it in the future. I will post it. I hope you guys enjoyed. I hope you guys gained a little bit of value. Appreciate you guys for hanging with me today. We have a fresh week coming up, so I wish you guys nothing but the best. Be safe. Trade safe. I'm not going to answer any questions that are spammed. I promise you guys, the more you guys spam, the more the question's not going to be answered. But listen, I wish you guys all the best. Please look out for, I have another video coming out for you guys on Tuesday, another one coming out next Saturday, and a lot coming in the Telegram. Yeah, Adia, listen, thanks for posting your name, because next time you join this webinar, I'm simply going to ban you. I don't like spamming stuff. I really don't. Thanks, Steven. No worries, Steven. Appreciate you for joining. No worries, Lance. Thank you for all you guys. Much love. Appreciate it. We'll talk soon. All the best.